Goldman Sachs and Wellington Trust are both calling for July rate cuts. Folks, we need to talk about this rate cut thing, July, September, November, but I want to step back from that and actually break down what may or may not happen in the economy. Folks, this is the daily financial news. I've been studying the markets for 30 plus years, focused on consumers. Obviously built a real estate portfolio over 15 years and retired, 8 years ago. No, 7 years ago. So thank you for being here. Like, subscribe, comment, become a part of One Rental at a Time. So what are the chief economists saying? So the first up, we got Luke Tilley, chief economist at Wellington Trust. Luke's full cutting cycle has them cutting twice in 2024 and 6 times in 2025. Folks, if you don't know what that means, that he sees the Fed funds rate going from roughly 5.5 to 3.5 in the next 18 months. Sometimes I look at these calls and say, be careful what you wish for. What would a 200 basis point cut or cuts mean? We can talk about that in a minute. How about Goldman Sachs, Jan Hatzius? He is saying, why should the Fed wait till September? They should cut in July. Jan went as far as to say the data in August could be messy and thus delay a September rate cut till November. So Jan is like, hey, there's a clear reason you should cut today. All right, now, so let's talk about what this might mean to the consumer. And when I think about the overall economy and what rate cuts might mean, I kind of break it down like this. The first thing I think about is commercial banks. What might happen at commercial banks? Undoubtedly, the last 18 months or so has been troubling. They have seen higher rates have their balance sheet values fall, right? Because they have bonds and things of that nature. But if the Fed does get on a rate cutting cycle, and should it be as much as Luke is talking about, 200 basis points, commercial banks could actually front run rate cuts. Now, how would they do that? Well, what they would do is they would start getting aggressive with bonds today, right? Let's just say, for example, I don't know what the 10-year is trading at today. Let's call it 4.5. I have no idea what it is. Probably 4.25. Let's call it 4.5 between friends. If the regional banks see rate cuts coming, they buy a bunch of bonds. They sit on them. Over the next 18 months, rate cuts take the Fed Treasury or the Fed rate from 5.5 to 3.5. That likely ripples through the 10-year. The 10-year maybe goes from 4.5 to 3.5. But what happened to the value of those bonds? The value of those bonds go up. So again, their balance sheet starts to be repaired. So again, this is something to think about. And should the regional banks see rate cuts clearly coming, I don't think it's out of this world to think regional banks will front run and start to heal their balance sheets. So that's step one. Step two, what about the small and medium-sized businesses? You and I have been talking for 18 months at least about the big ones, the big companies, whether it be builders or the tech companies, people with balance sheets, people with the ability to borrow, people with equity, people with cash. They didn't need debt to grow. If we get in a rate cutting cycle, and if it's again as large as Luke Tilley is talking about, 200 basis points, will that be enough to start small businesses borrowing? Will this help small businesses who maybe had to go out and get hard money loans or other things to refi? Maybe. And then finally, let's go to the consumer. You've heard me talk about for quite a while that I think the economy is certainly slowing down. Certainly real estate's going to take it on the chin. I think we're going lower for existing home sales when July numbers are reported. And a rate cutting cycle like that, I think the average consumer is already out of the market. However, something we've talked about before, the 30-year mortgage has not been below 6.7% in well over a year. Last I checked, I think we're at 6.85, 6.87, something like that. So should we get on a rate cutting cycle where rates go down, I don't know, let's call it 150 basis points. Let's say we get down to 5%, 5.25%. Will that be enough to reinvigorate the market? Probably. Now, again, that will definitely be, in my opinion, post-election. I just see this very slow environment for the next 4 months. I think I read somewhere we're 100 days away from the election. I don't know if that's true, but I thought I read that this morning. So again, we are hopefully in the home stretch to get this behind us. Well, what will happen to the consumers with all this debt? You've undoubtedly seen the charts with consumer debt, credit cards, auto loans, homes, signature loans. A significant rate cutting cycle would allow many to refi their debt. Also, if rates go low enough, will the homeowners who have monster equity actually come out and maybe do cash out refis, rate and terms? What will consumers do if we get on a 200 basis point cutting cycle and rates go to 5%? I think if rates go to 5%, like 5% even, that will be close enough to actually cause the move up market to actually start moving. So again, lots of people are starting to talk about September rate cuts like they're a certainty. Again, Fed Watch tool has it as a 100% chance. A lot of people are still talking about July, but I want to ask you this question. The Fed has taken great pain to telegraph what is coming. I ask you, if they surprise us with a July rate cut on Wednesday, what does that mean? Seriously, what does that mean? Do they see something that we don't? Do they see some black swan or whatever that they are trying to get ahead of? Again, I remind you, last week we found out that GDP was higher than expected at 2.8%. PCE did not go down. It was flat month on month. Job market, at least on the weekly claims, certainly not skyrocketing higher. So what would a July rate cut really mean? I think a July rate cut would shock the market. There might be a moment of euphoria, but then I think the smart money goes, oh no, we are in a mess now. So again, sometimes you got to be careful what you wish for. By the way, folks, at 8 o'clock, so in about 23 minutes or so, I'm going to go live right here on YouTube. We can talk about buyer's market. We can look at deals. We can talk numbers. I'd love to kind of break down what I'm thinking about for this buyer's market. So if you want to talk real estate, economy, Fed rate cut, training for a marathon, whatever, I will be live in about 20 minutes or so. Come on by, say hi, ask any and all questions. That would be great. We did get one earnings this morning that was frankly a disaster. We got the earnings from McDonald's. McDonald's missed top line and bottom line. What does that mean? That means they missed revenue. They didn't sell enough hamburgers. And they missed earnings. They sold those hamburgers and made less money than expected. In fact, McDonald's had same-store sales pull back. It was actually negative 1%. Folks, consumers are pulling back. I think we've known that for quite a while. If McDonald's is missing revenue targets and same-store sales are down 1%, what does that mean? Well, I think, again, as I've talked before, I think it means that we're going to call a recession starting either June or July of 2024. We will do that sometime in Q1 or Q2. It is always backwards looking. So again, we have a lot of earnings coming this week. I think I read somewhere 120 or so S&P 500 stocks are reporting. So we will learn more about that coming. See what's going on with the consumer. I'm looking at cruise lines and hotels and just all things consumer to see what's going on. I don't know if you've seen this, but something I check out weekly, Truflation. Truflation, it's TRU-flation. So there's no E in that. Truflation now is posting inflation at 1.62%. 1.62%, just in case you didn't know, is below 2%. Now, again, Truflation is amazing. It takes 5,000 plus metrics, constantly updating it. It has had a 97% accuracy with the numbers that the government puts out. They just put it out early. So again, 1.62 is a cycle low. So again, if the Fed wanted to declare victory, that is clearly something they could put out there. I do want to talk about what does 1.62% mean. It means disinflation. It's not deflation. I don't want anybody to get confused. Inflation going up at 1.62% is still inflation. It is still going up, right? So, and by the way, it's going up on higher numbers. So again, just because we have Truflation saying a reading of 1.62, that does not mean prices are going lower. That is not how this works. The CME Fed Watch 2, again, we talked Fed Watch tool. We talked about earlier having 100% chance of a July rate cut. It actually is forecasting by April 30th. So what is that, like 6 months, 7 months? Rates will be 4%. So the CME Fed Watch 2 is actually forecasting 5 rate cuts by April. What else do we want to talk about? Oh, I should give a special shout out to Jared and Kyle. Jared and Kyle were gracious enough to come on this channel yesterday to talk about their experience. Kyle is was a 23-year-old real estate investor, house hacker. Started this journey with a down payment assistance program. Got into a home, rented out rooms to his buddy. He's gone from a negative net worth to a net worth over 700 grand in 5 short years. You can listen to that story. It was posted yesterday. And then Jared's doing something that I have not heard of before, and that is not only rent by room, but out of state rent by room, which is a pretty amazing story. So again, if you want to hear those stories, they are on my channel. Again, Jared and Kyle, congratulations. On that front, we need to recognize Jared. He got his golden ticket, and he has gotten 2 black cards. So Jared has closed 3 transactions in roughly the last year or so. So Jared, congratulations. Your cards will be going out in the mail. So congratulations. All right, that's what I got for you today. Again, thank you for being here. Like, subscribe, comment, become part of One Rental at a Time. Again, I will see you in about, 15, 16 minutes for another live where we talk about real estate, economy, interest rate cuts, whatever you want to talk about. Shoot, even marathon training, which is something I am in the middle of. Have fun. Take care. Have an amazing day. Later.